Okay, so hello everyone. Welcome to Anuj Jindal. Welcome to RBI 247 sessions. And with this, Happy Republic Day. Good evening, everyone. Good evening, Pratima. Good evening, Abhishek. Good evening, AK. Good evening, Afsana. Hello, everyone. Tell me if everything is fine with the audio and the video of the session so that we can start with the session very quickly. Okay? Okay. Thank you. Thank you. Thank you for telling me this. Everything is fine with the audio. Okay, so before we start our day, it's our duty and it's very important thing to tell you that that we have provided you with the free resources. Okay, and this free resources you can access through the Anuj Jindal website. That is, you can simply log in or search in the browser that anujindal.in, and there you can find this free resources, free practice questions. Okay, and here you can see some questions related to the static portion of your syllabus. Right now, why I keep on telling you this, because the static portion of the syllabus is very important for you. But why? Because करंट अफेयर्स याद करना और उन्हें समझना और भी ज़्यादा आसान हो जाता है व्हेन यू आर एबल टू अंडरस्टैंड द स्टैटिक पोर्शन ऑफ द सिलेबस. राइट नाउ देयर कैन बी डायरेक्ट क्वेश्चंस फ्रॉम द स्टैटिक part of the syllabus as well. So these questions hold the utmost importance here, and you can see there are different level of question related to finance. Here you can see that there are basic and moderate. More level of questions like such will be uploaded on the website. That is going to be free for all of you, and more subjects will be uploaded here. Here you can see abhi finance ka hai, more subjects will be uploaded along with this subject. I hope it is clear to you. I hope you will visit our website to check these free resources. Right, let's move on with the PPT and today's session. Okay, right. Okay, so let's see what we have in our today's session. Okay, so we have 5 news in total. Okay, so the first news talks about the foreign exchange management regulation. The RBI recently amended this regulation, and we will look into this. What are the changes? What are the amendments? Okay, how a question from this can be arise in the examination. Okay, now the next are related to the RBI's guidelines related to ARCs. Okay, asset reconstruction companies. Okay, we will have a quick look on this guidelines as well. Then we have a RBI's deputy governor speech. This is going to be very important for your interview and for your exam as well, because you can write in your descriptive answer related to this speech. Okay, then SEBI and NISM launched a e-learning course. Okay, we are going to study about this as well. And then at last we have SEBI's proposal regarding the revisions to the SSE framework. Okay, I hope this is clear to you. Let's start with the session. Okay, the first news talks about the foreign exchange management deposit, the 5th amendment of this regulation 2025. Okay, so whenever we talk about the foreign exchange management, whenever we talk about the foreign exchange, we talks about FDI, FPI, exporters and importers. Why? Because these are the one who deals in the foreign exchange and deals in foreign currencies, and these regulations are going to be very important for these participants, and hence this regulation do focus on these participants. Okay, so what is the agenda of releasing such regulation or such amendment is that to make it more clear to the participants that what do we mean by such regulation, to remove all the ambiguity from the regulations. These amendments make the regulation more concrete and more clear related to the facts and the regulation and the rules related to the foreign exchange management. Okay, so earlier these regulations were named as Foreign Exchange Management Deposit 2016, but now the name has changed to Foreign Exchange Management Deposit 5th Amendment Regulation 2025. So I hope you will remember the name of the regulation. And again, the agenda is same. I have already told you that the agenda is to bring more clarity in the regulations and make it simplify for the exporters, importers, and all the participants who deals in the foreign exchange, and ensuring that we provide some flexibility to the non-resident people as well. Okay, let's move to the key amendment. So the first amendment says that AD branches outside India can also handle this transaction. Now what do we mean by this? Now ADs are banks here. Okay, now the banks that have their branches in the foreign countries, okay, have their branches in the foreign countries, can also allowed to open or handle transactions related to foreign exchange. Okay, earlier they were not allowed, the foreign branches of the Indian banks were not allowed to hold such transaction related to foreign exchange, but now with this amendment the RBI allowed the banks, Indian banks and their foreign branches, that they can handle such transactions with the exporters and the importers. Okay, so this is a flexibility that RBI is providing to the exporters, or we can say other participants of the foreign exchange market. Okay, the second term says that the Indian bank, the term Indian bank has been replaced with a bank, because the agenda here is that earlier it was only restricted to the Indian banks. Okay, all the rules and regulations were related to the Indian banks, but now the Indian banks with foreign branches can also handle this transaction. Hence, to bring more clarity in the regulation, they have replaced the word Indian banks with the A bank. Okay, I hope it is clear. This is very simple. And the transfer of funds for all bona fide transaction between the repatriable rupee account maintained in accordance with these regulation. Now what this means, that they are explicitly stating this fact that these transactions should be bona fide in nature. What do I mean with this? That these transactions that are be conducted in foreign exchange must be fair, must be fair and genuine. Okay, and genuine. So all the legal transaction will be conducted in this. Earlier this was not mentioned in the regulations, but now it has been explicitly or being clearly written in the rules and regulations. Okay, I hope it is clear. Now before we move on to the next key amendments, we will first look at what is special non-resident rupee account, SNRR account, because in the next slides we are going to read some regulation related to this account. So it is very important for you to understand this account first. Okay, let's understand what this account is. Okay, this is an account that has been opened by exporters or any other person for the business transactions only, for the business purposes only. Okay, if I talk about this repatriable rupee account, this is for general use. Okay, this is for general use. Suppose there is a person living in US, they want to send money in India. Okay, now this sending money is for general purposes. Okay, this is not specifically related to the business, and hence he or she will open this RRA account. Okay, RRA account. But in case the person is handling some kind of business in other countries, specifically India, they will open SNRR account, and this is account that is specifically opened for the business purposes only. This is opened with the ADs. Okay, ADs, that means authorized dealers, banks that are registered with the RBI or authorized by the RBI to participate in the foreign exchange or facilitate foreign exchange transactions. Okay, so any person resident outside India having a business interest in India may open SNRR account with the AD for the purpose of putting through bona fide transactions in rupees. So the main agenda of this SNRR is to keep rupee in it. Okay, there is one more account, that is foreign currency account, FCA. In this only foreign currencies can be stored. But if I talk about the SNRR, only rupees are stored in this. Okay, Second point, SNRR accounts are used for specified transactions like trade, foreign investment, external commercial borrowings, and more. Okay, the agenda is clear. The focus is more on the businesses transaction. Suppose the one company in India is raising funds from international institutions, so they are doing external commercial borrowing. For that, they have to open SNRR account to receive the foreign money in Indian rupee. Okay, I hope the agenda is clear here, and the aim is to reduce the need of frequent inward and outward remittances in the foreign currency. So the agenda is clear: to reduce the cost, and reduce the need of frequent foreign exchange in the markets. Okay, with this account, the one can simply transfer the rupee, or we can say money, directly to the foreign institution. Okay, so they are reducing money, they are reducing cost of converting it into foreign currency. Okay, and the money that is being recorded or deposited in the SNRR does not attract any kind of interest on it. So the money that is kept in the SNRR account does not attract any kind of interest on it. Okay, I hope the features of the SNRR and the concept of the SNRR is clear to you. Okay, so let's move on with the key amendments in the SNRR. Okay, so first we will discuss about the eligibility for the SNRR. Okay, the person resident outside India having a business interest in India may open SNRR. So the eligibility is same as before. Okay, there are few amendments, only minor amendments are made in this. Okay, so with whom they can open such account? AD or its branch outside India. Okay, here I would like to tell you that foreign banks, do not get confused with the foreign banks and foreign branches of Indian banks. Foreign branches of Indian banks, these two are different things. They are not allowed to open a account, SNRR account from in the foreign banks. Okay, this is not allowed by them, but they can open the same account with the foreign branches of Indian banks. Suppose SBI has a branch in the Singapore. So the one an exporter can open account in the SBI Singapore branch. Okay, so I hope it is clear that with this amendment they are saying that this account, SNRR account, can be opened in the foreign branches of Indian banks. Okay, the purpose would be for the current and the capital account transactions with the person resident in India. Okay, so the purpose is the person who is living in India, okay, is permissible to conduct which kind of transactions? Current and capital, such as FDI or FPI, or a person like exporter who deals with goods and services, sending goods and services in the foreign countries. So they do receive the payments as well. So this is a on and go procedure. So this is for the current account, okay, and for the capital account. I hope it is clear. Clarification: specific phrase like SNRR account in the India have been added to ensure the clarity about where these accounts are located and operated. Before, only SNRR account was used in the regulations, but with this amendment more clarity has been brought up with these regulations, wherein they are stating that the SNRR account will be said as SNRR account in India, in order to ensure where this account is located. Okay, let's move on with the other key amendments, which says changes to SNRR accounts. The tenure: earlier the tenure of SNRR account was capped with 7 years. That means after 7 years this account will be removed or closed. Okay, but with this new amendment, the RBI says that the exporter can keep this SNRR account based on their contract tenure. Now what do I mean with this? With this I'm saying that suppose there is a company A which is based in US, and they are investing their money in India. Okay, they are let's take another example wherein company A, which is based in US, is collaborating with company B in India. Okay, so they both have a contract of 10 years. Okay, so now as per this contractual agreement, the SNRR account will be remained opened as per this tenure, that is 10 years. Now earlier it was capped at capped with 7 years, but now this will be capped as per the contract tenure. Okay, this ensures that the transactions are made as per the contract, as per the requirement of the participant who are dealing with the transaction. This gives them more flexibility to deal with Indian companies and to invest in India with the longer period of time. Okay, transaction with IFSC. Okay, earlier only banks, people or exporters or importers in the IFSC unit were allowed to open the SNRR account with the bank which has unit in the IFSC only. But now with this amendment, the person or the company which is available in the IFSC can open account outside a bank, outside the IFSC unit, outside the IFSC unit. Okay, so they can deal with the bank which is not in the IFSC unit. Okay, so earlier this was not allowed. With this amendment, they have allowed that yes, you can open the SNRR account with the bank which is not located in the IFSC unit. Okay, so the units in the IFSCs can now open a SNRR account with Indian banks located outside the IFSC for the business related transactions. Okay, the last point says again, it also clarifies that account holder, that the word has been changed or added with having the SNRR account in India. So they are also going to use account holder as this, account holder having the SNRR account in India. Okay, they will add this phrase as well along with this terminology. This is account holder having the SNRR account in India. Okay, so this whole phrase will be used for the account holder from now onwards in the rules and the regulations of foreign exchange management. Okay, so with this we are done with the first news. We have come to the second news that discuss about the guidelines for the ARCs, that is the asset reconstruction companies. Okay, now what are asset reconstructions company? Whenever we talk about these are the one that buys the bad loans from the banks and the financial institutions so as to provide them liquidity in the market. Suppose there is a bank, okay, they have a lot of bad loans with them. Suppose they have 1 crore of bad loans with them. So what will this ARC will do? ARC will buy these bad loans from the bank, okay, at a discounted rate. Suppose that it says that I will give you only 90 lakhs for these bad loans. Okay, so the bank agrees. Bank says, okay, you will provide me liquidity for this. It's okay, you can take my all loans, my all bad loans. Okay, now this ARC, what this ARC will do? ARC will take recovery. Okay, now this ARC will take care of the recovery. And how do they recover it? They are specified in the regulations of the RBI. Okay, now how do they can recover it? They can recover by selling the assets of the borrower, or can seize the assets of the borrower, or can simply recover the amount from the borrowers. Okay, these are the common ways that ARCs use to recover all the money from the borrowers that default on their loan. Okay, now let's look at the guidelines, what these guidelines say. So as per the guidelines, RBI revised these guidelines for the RCCs, wherein they explicitly says or clearly mentions that how they should handle all the settlements that they do in a daily basis. Okay, so some regulation has been issued by the RBI to ensure that all such regulations and all such settlement made by the ARCs are done in a right or fair manner. Okay, Suresh, I am speaking in English only. I am not using Hindi today. So I hope everything is clear. Okay. Okay, you didn't understand the term buying bad loans. So bad loans are the loans on which the borrower has default. Okay, it has been more than 90 days. It has been more than 90 days that the borrower hasn't made any payment to the bank. Okay, for the loan. So it has become a bad loan. It has become a non-performing asset for the bank. Okay, now bank is not able to recover from this borrower. So what this bank will do, bank will sell all these bad loans to this ARCs. Okay, so ARCs will buy these loans at a discounted price and will recover it in its own way. Okay, now what RBI has done, RBI has released some guidelines so as to make this settlement process more concise and more regulated, fair, and must be unbiased by the participant, for the investor as well and for the borrower as well. Okay, so this protects the lenders and the investors as well, and ensuring that the process is ethical and fair in terms of decisions. Okay, let's move with the guidelines. Okay, the first guideline says that every ARCs must create board approved policy for settling dues with the borrowers. Okay, so they said that every ARCs, there are different kind of ARCs in the financial market. Okay, so every ARC have their own board approved policy. Okay, that means how do they deal with the settlement, how do they deal with the settlement, how do they make payment to the borrower. Okay, how do they receive payment from the borrower. Okay, and do they get money in one time settlement, or they take money in installments. All such procedure must be written in the policies of the ARCs. Okay, it should be predetermined or it should be pre-decided by the board. Okay, and each and every rules and regulation must be approved by this board of the ARCs. Settlement should only happen after ARCs have tried all other recovery methods and conclude that a settlement is a best option. Okay, so the ARC have tried any other way, every other way to recover from that borrower. Suppose there is a borrower who has defaulted on that loan. Okay, and they have tried each and every way of recovering that loan. They have also requested the borrower to pay back all the money. They have also seized all the assets and all the assets of the borrower. Still they are not able to recover the loan amount. With this they will settle. They will only then they will settle the ARC, or we can say settle the bad loans. Okay, the third says valuation of the securities. The third says valuation of the securities. So the settlement amount should generally be at least equal to the realizable value of the securities. This means that suppose there's a car loan. Suppose there is a car loan, a borrower defaults on that car loan. Okay, and ARCs bought this car loan from a bank. Okay, now the loan was of 3 lakh rupees. When ARCs recover that amount from selling this car in the market, the recovery was only 50,000 rupees. Okay, so this regulation says that ARC at least should get a realizable value of the asset. Okay, now this realized value of the car loan is more than the 50,000 rupees. Say it is 1 lakh rupees. So in this case ARCs must ensure that the asset, whatever assets they are from which they are realizing the value of the loan, it must be equal to the realized value, or we can say the fair value of the asset. Okay, they have to try and they have to ensure that the larger amount of the recovery is being recovered by ARCs. Okay, if there is significant difference between the initial valuation and current valuation, ARCs must document such reason. In case suppose there is a 1 crore rupee of loan and they have only realized say 10 lakh rupees from that loan. So there is a huge difference between what was initially said the loan was and what is what amount they have recovered. So they have to mention the specific reason for such significant difference in the initial amount and the recovered amount. Okay. Let's talk about this regulation which says lump sum payment. The settlement should ideally be lump sum. Okay. So they have to make one time payment. Okay. One time payment should be made in all cases. But an installment payment can be allowed. An installments can be allowed only in case the borrower, if borrower is in support of this decision. Okay. Okay. Settlement means that either they will take less money from the borrower. Okay. उन्हें कहेंगे कि आप थोड़ा सा कम कर लेते हैं हम आपका लोन का अमाउंट एंड वी विल पे यू, द बोरोवर विल पे द ARCs for the recovery. Okay. Now this kind of adjustment can only be made in case that there is no other way of getting the loan recovered. Okay. Settlement means it can be used in general sense also, that we can settle this amount. Okay. Let's adjust a bit for recovery. Okay. So in this way they ensure that the borrower is paying a little bit of the amount at least. Okay. So in such a settlement case, either they will receive, ARCs will receive the lump sum amount, or they will get amount in installments by the borrower in case borrower is satisfied with such decision. Okay. In case there is a value ascertained with the loan which is more than 1 crore rupees, there is different kind of regulations. In that case, IAC, that is the Independent Advisory Committee, should attend such recovery meeting. Okay. And they have to ensure that the decision that has been made by the meeting and wherein the lender and the investors meet, the decisions that are being made in the meeting are fair and unbiased. Now who all are the members of this IAC? All the legal experts, technical experts, all such experts are included in this committee to ensure that the decision has been made in a fair and unbiased way. Okay. The main members, the two independent directors should be a part of this committee and the board of the ARCs as well at the time of approving the settlement. Okay. In case of small, that is the settlement wherein there is less than 1 crore of rupee is involved. In that case, there is no need of any official in that meeting. Okay. Official related to whether it is related to IAC, that is committee, there is no need to attend. They are not allowed, or we can say they are being freed from such kind of investments, or we can say such kind of dealings or decision making whereas there is less amount involved. Okay. They will be involved only in decision making whereas more amount or significant amount has been involved. Okay. So they are being freed from such decision making. Okay. The ARCs, however, in such case must send the report regarding the decision making. Okay. What was the case all about, how much initial loan payment was, okay, and how much recovery has been made, and what is the settlement amount. All such details must be sent to the board of the ARCs on a quarterly basis. Okay. Frauds and willful defaulters. In case there is a person who has willfully default, that means they have did such default deliberately. Okay. In such cases, the ARCs are also allowed to recover the amount even if the borrower has willfully default. Okay. They also have to ensure, that is ARCs, asset reconstruction companies also have to ensure that such decision making, while you are recovering the amount from that willfully defaulter, you have to ensure that this does not affect any ongoing criminal proceedings against these borrowers. Now in case this borrower have any kind of other proceedings going on with the court, okay, in such case such court proceeding must not get impacted by the ARC's companies, okay. It should be independent. The procedure dealing with such willful defaulter or borrower must be independent in nature, and this must not affect any proceedings against that borrowers in the court, okay. The third point says judicial proceedings, which says if recovery is already under the legal process, any settlement with the borrower needs approval from the concerned court or judicial. This means that in case suppose there is a company, company A, okay, that has defaulted on rupees 10 crores, okay. Now all the debtors or we can say creditors are already went to court for the resolution and for the recovery, and asset reconstruction company has also been a part of this. So whatever asset reconstruction company is recovering from this company A, they must take approval from the court as well, because this case has been already recorded in the court, okay. Now whatever recovery they have made from such company, they have to make and take an approval from court for the same reason, okay. I hope it is clear. Now we have come to third news. In case you have any doubt related to first news, you can tell me. Now we will discuss one news related to the speech of the Deputy Governor M. Rajeshwar Rao, okay. Now what this Deputy Governor told about that there is a structural liquidity problems in the Indian banking system. We have already talked about this so many times in our session that there is a liquidity problems with the Indian banking system, and hence they are issuing a lot of CDs, that is certificate of deposits, and commercial papers in the market, okay. Now there is a lot of problem with the certificate of deposits and the commercial papers as well. So this speech highlights what are the problems that are associated with these short-term borrowings, and we will discuss this in detail, okay. So the reason why we are discussing this, that Indian banks are over relying on such wholesale funds. That means yes, they are for the short-term borrowing, but the significant amount has been borrowed from these securities, that is certificate of deposits and commercial borrowings, okay. So hence there is a need to pre-plan the upcoming risk in advance, so that Indian banks are stable enough, Indian banks are resilient even enough to deal with such crisis or deal with such problem. Let's talk about what this speech, what are the key points of such speech, okay. So the first point, the RBI Deputy Governor highlights that there is a over reliance on the wholesale funding. Now what do I mean with wholesale funding? Wholesale funding is as the term tells you, that a significant amount of funds has been raised by the banks, okay, at one time. So they are going for short-term borrowings with wholesale funding. A lot of amount has been borrowed by the banks through this short-term borrowings, and banks are relying on certificate of deposits. Now what happens? How do they use this? The certificate deposits, they issue certificate of deposits in the market, and individuals or say company invest in such certificate of deposits. Suppose a bank want to raise how much? Rupees 1 crore rupees, okay, for 6 months. These are short term. CDs are issued for short term only, let's say 7 days to 1 year, okay. So they want to borrow money for 6 months at the rate for 6%, right? So the investors, that is individual and companies, will give 1 crore of rupees, and at the end of maturity they will get this principal amount back with interest, say 3 lakh rupees. Okay, I hope it is clear how this CDs work. Now they are not borrowing this much amount, or they are borrowing some significant amount, say 20,000 crores or 30,000 crores through these certificate of deposits. Okay, now what RBI Deputy Governor highlights that suppose in the future there is some uncertainty in the financial market, and these individual and companies are not really want to remature this, or we can say continue with this certificate of deposits. Suppose a bank at the end of this 6 months ask these individuals and companies that let's renew this certificate of deposits, let's take this round for another 6 months. Okay, now this has become a 1 year certificate of deposit. What if this they are not agree with this renew of this certificate of deposits? Okay, now in that case the banks would not be able to make immediate payments, right? Due to uncertainty in the future, these individual and companies are not happy with this certificate of deposit, because they are wondering whether the banks would be able to give us the money or not. So they all are taking their steps back, and they are not ready to invest in these certificate of deposits, and this can lead to a rollover effect, a rollover risk for the banks, wherein the risk of not being able to renew the funds when it matures. Okay, so this is a kind of risk that the Indian banks can face currently, and hence there is a need to diversify the alternative source of funds by the Indian banking systems. Okay, the second point says that there is a significant difference between a deposit and a credit ratio. Now I have already told you in our financial stability classes as well, wherein I told you that a significant difference between a credit and the deposit growth is not good for a bank. Suppose they are getting 10% of the growth in deposits and the credit growth is 30%. So there is a 20% of gap in between the growth of deposit and the credit. And how do they manage such gap? Okay, such gap will be managed by issuing such certificate of deposits or commercial papers. Okay, now this is very risky. The certificate of deposits is very risky, and they have to find some alternative source of finance because they are borrowing in a significant amount. So what RBI Deputy Governor says that some banks deposit growth is slower than their loan growth, and this imbalances signals the structural liquidity problems in the Indian banking system, which is again is not a good sign for the Indian banking system. If we talk about the NBFCs are heavily relying on the commercial papers. Now how commercial papers work? These commercial papers are issued by the large corporations or companies like NBFCs. Okay, now what do they do? They issue a commercial paper. This is a kind of short-term security. Okay, they issue such security, says they want to raise 10 crore rupees. They want to raise 10 crore rupees, and they will what they will do, there will be an investor, and this investor says that I will buy this security at 9.8 crore. Okay, so at a discounted level, at the discounted rate, the investor has bought all these securities, and the end of this maturity, at the end of the maturity of this security, the investor will get whole amount of 10 crore rupees. Okay, this is how this commercial paper works, and these commercial papers are also can be traded in the secondary market. This means that this investor can sell this commercial paper in the secondary market to the other person as well. Okay, now this is how the NBFC raises fund from the market. Okay, now these are also they are using this very heavily. Okay, and they are also issuing non-convertible debentures. Now there are two types of debentures. One is convertible debentures and non-convertible debentures. Now convertible debentures are the one which can be converted into the equity shares of the company. Okay, and non-convertible are the one which cannot be converted into which cannot be converted into equity shares of the company. As we know that equity shares gives you power of ownership of control of the shares of the company, but debentures is just like a debt. It's like a debt, or we can say borrowings for the company, right? Debt fund. And hence these are also not really very good for the companies like NBFCs. And what is the risk for them? NBFC borrowing from international market. Now these are being used for international from international institution. That means they are getting money in the dollars and then they are converting that into rupee and then using it for their business purposes. Now we can see the problem of rupee depreciation, wherein we are putting more rupee to buy one single dollar, right? So with if we consider today's scenario wherein the rupee is depreciating day by day, and with this the debt level of the NBFC will increase in terms of rupees, because the dollar term of that loan will remain same, but they are putting more rupee to pay such debt in dollars. And that is a risky point, and they are not hedging such risk in the foreign exchange market, and there is a need. So what RBI Deputy Governor says, that NBFC should use what? They should use foreign exchange hedge securities that can help them hedge such currency valuation risk. Okay, I hope it is clear. Suggestions. Now RBI Deputy Governor says that there is a need to do the stress testing, that is the hypothetical situation of crisis should be taken by these banks in order to ascertain that how will their bank react at that point of time, and ensure that they have enough provisions with them, they have enough capital with them in order to deal with such situation well in advance. Okay, so there should be they should evaluate their resilience in extreme situation like crisis, global crisis, right? Now the second suggestion that RBI Deputy Governor made was contingency funding plans, that is the plans they make well in advance for the crisis, make them well prepared for the upcoming crisis, ensuring that they are resilient enough, they are financially stable enough to deal with such crisis, and predict all such situation wherein there is a deposit withdrawals by each and every citizen or each and every depositors, like the loan prepayment is not being done by any of the borrower, and interest rate are being really very volatile in the market. All such factors should be considered while making such plan in order to make it more resilient and stable. Okay, and the last suggestion that RBI Deputy Governor says, that consider RBI as a lender of last resort. That means a bank should come to RBI for the emergency fundings only, and that is not available for all time. RBI is not available for all time for the banks. Okay, now with this they want to say that in case the banks are using such funding from RBI as on a regular basis, more restriction will be put on such funding by the RBI from by the banks and by the RBI, so that we can manage this thing, because the banks are taking it very easily and they are not considering RBI as a last resort for their fundings. Okay, so they have to make them resilient, and they have to make them diverse. They have to make the funding diversified from each and other alternative source of finance, so that they can react as per the situation. Okay, let's come to the fourth news of the day, which says that SEBI NISM launches e-learning course. Okay, now we know SEBI is a regulator of financial market, and who is NISM? NISM is National Institute of Securities Market. Now this institute is being established by SEBI itself in 2006, and the agenda of establishing such institution was to infuse, or we can say increase, financial literacy in the financial market. Okay, so agenda was to increase financial literacy in the financial market. Okay, now this institution gives certificates to the participant whosoever take courses or take educational courses from such institution. Okay, so they also issue authorized certificates for the same. Okay, authorized certificates for the same. Now what this NISM and SEBI together do? They together released a course, an e-learning course for the municipal bonds. Okay, for the municipal bonds. Okay, now these municipal bonds are also be known as munis. Okay, these are issued by local or state government. Okay, who can participate in this? Who all can participate in this? Individual or companies, or we can say institutions. We need more space so that we can write, so I'm removing all this thing. Okay, we were learning about municipal bonds. Okay, we know who all are the participants. Now let's see for what tenure these bonds are issued. These bonds are issued for short term, for medium term, for long term tenure. Okay, now for short term it means in months, you can say 1 month to 3 years. In medium, they issue it for 3 years to 10 years, and this is more than 10 years to 30 years. Okay, these all are the tenures when a state government issues a municipal bonds, and the agenda of issuing such bonds is to raise funds for the infrastructure development or for the social good. Okay, now what this e-learning course here does, that this e-learning course helps the participant, that is the state government, the expert people who are the official participant in the system, help them learn how this municipal bond works and how we can improve such fundraising from such source. Okay, how we can use it and how we can improve the fundraising from these municipal bonds. Okay, so let's talk about it in a detailed manner from the PPT itself. So it is a free e-learning course that has been introduced by the SEBI and NISM, and the aim is to enhance the understanding and utilization of municipal bonds. I have told you. Okay, so these can be used by urban local bodies and related stakeholders. So whosoever are the stakeholders of the urban local bodies or state government can use this course to understand more about the municipal bonds and how this fundraising works in a real market. Okay, so the agenda is to foster the financial innovation, and so that they can bring more innovation and more ways to raise fund from these municipal bonds, and encourage the more issuance of these municipal bonds so as to contribute towards the infrastructure development and the nation's building. Okay, now what is NISM? I have already told you that it was established in 2006 by the SEBI, and the agenda is to bring through this skill development and professional training programs, they enhance the quality and compliance of the participants. Okay, there are participants who are not really aware of the rules and regulations, who are not aware of the key terminologies of the financial markets. So with this institution, they are ensuring that through our skill development, through our these educational courses, we are improving the compliances of these participants and ensuring that there is a enhanced qualities of these participants while they are working and while they are raising funds from the financial market. Okay, so they also provide certification for the courses, and the NISM, that is the institution, is located in Patalganga, Maharashtra, India. Okay, these all are the factual information related to NISM. So in case a question comes regarding this, you must know that this institution has been released by the SEBI in 2006, and the body is located in Maharashtra. Okay, now what are the features of this course? Okay, now the course is a 10-hour self-paced course. That means self-paced program, that it is a 10 hours course, okay, which include video lectures, experts and interactive quiz for the real world cases, okay. Now the participant have to complete this course in 180 days from the day of registration, okay, and the course will be accessed for free till 31st March of 2025. After that, fees will be charged for such course, okay, and the participants will get the certificate on a successful completion of the course. Okay, these are the simple features of the courses. And let's see, the e-learning course aims to familiarize the municipalities and the urban cooperative bodies about. Now what this e-learning course conclude, or we can say what it includes regarding the municipal bodies, or we can say municipal bonds, okay. So the alternative funding mechanism, that means apart from municipal bonds from where they can raise funds, okay, regulatory provisions for issuing and listing the municipal bonds. So how a municipal bond is issued in the market and all such related compliances and rules and regulations will be there in the course. Roles and responsibility of the key market intermediaries, that means the banks, whosoever is issuing such bonds, okay, and the key participants, or we can say key stakeholders, must know how their roles and responsibilities will be in such a process of issuing municipal bonds. Importance of project identification and investor outreach, that means they must know well in advance that for what project they are issuing the bonds, and is there any limit that only specific projects such municipal bonds must be issued, and all such regulations will be under this we can say chapter or course. Escrow mechanism, we all know what is escrow account. Escrow account is a third party, or we can say third party account, or we can say wherein third party is the one who is handling this account, or we can say this mechanism of payment, okay. All such knowledge related to this escrow mechanism and account will be given under this course. Credit rating, they will be told about the significance of credit rating. State government with higher credit rating are better able to raise from fund from the municipal bonds, but a state government with a lower credit rating would not be able to get more funds, and agenda here is to tell them about the importance of having a good credit rating bonds, okay. And the concept of green municipal bonds for the green investments will be told, along with social impact bonds, wherein the agenda would be on healthcare and education purpose, okay. So I hope the aim is clear to you. Now we have come to the fifth news of the SEBI, wherein they have told that SEBI has proposed some revisions, or we can say rules related to SSE, which is social stock exchange. Social stock exchange, okay. So a framework has been revised by the SEBI, and this is currently a proposal by the SEBI, and we will see what kind of proposals have been made by the SEBI for this social stock exchange. इससे पहले हम देख लेते हैं what is social stock exchange. Social stock exchange is an exchange wherein non-profit organization list themselves for raising funds. We know what is non-profit organization. Non-profit organizations are the organizations that work for the societal benefit or the environment benefit and for the social development of the economy, okay. So their agenda is not to earn profit. These are non-profit organizations, okay. So SEBI has proposed some changes to broaden the definition of NPOs, okay, non-profit organization, and expand their activities to be eligible under the social stock exchange framework. So in this framework, what SEBI has done, that more kind of, or we can say different types of social enterprises has been added, and they have also broadened the activities that these non-profit organization deals in, okay. So with this, what will happen, that more participants will come, more types of organization will come under this social stock exchange, and with this increase in participation, they can raise funds in a more better way, okay. Okay, so what is the aim? Aim is to increase the participation. Aim is to broaden the scope of the NPOs. Okay, so that they can raise fund from SSEs, lower their cost and barriers to entry as a NPOs. Okay, and enhance the governance and the accountability. We will see how these are achieved by the SEBI through these guidelines, or we can say these proposals. So the first proposal says that activities has been broadened by the SEBIs for social enterprises. Okay, now earlier only few activities were allowed for being a social enterprises. Let's say it was related to health only, or it was related to education. Okay, it was related to charity, it was related to environmental problems only. Okay, but now these more activities has been added by the SEBI, wherein they have also included vocational skills training to enhance the employment. So they have considered the problem of employment in India here. So all the organizations that are working towards the employment opportunities will be considered as social enterprises from now on, considering this proposal. Okay, they have also considered welfare for disadvantaged groups, including children and women, elderly people with disabilities. Okay, so the social enterprises that are working towards these disadvantaged group, for the upliftment of such disadvantaged group, will also be considered as social enterprises, and so on and so forth. They have also added few more activities such as environmental related activities, promotion of arts, culture, heritage to preserve the cultural diversity. Okay, enterprises who are working for the welfare of the domestic animals. Okay, and the enterprises that are working towards preservation of heritage and remote location. Okay, they are working towards promoting the sports in the state or the economy, or if they are working towards science and medicine. So all such activities now will be considered under the social enterprises. Okay, the P point says the recognition of new legal structure for NPO. Firstly, only NPOs, that means non-profit organizations, were considered as the social enterprise, so that they can list themselves in the social stock exchange. But now more types of NPOs will be included in such social enterprises. The first one is the trust will be included in such social enterprises. The charitable societies, okay, registered under the state law, will also be considered as social firms, and companies registered under the section 25 of the Companies Act, that is NPO itself. Okay, NPO itself. Okay, non-profit organization that are registered under section 25 of the Companies Act 1956. So along with this, they are also going to have these two more enterprises as well. Okay, the third says addressing cost and registration concerns. So as we know that non-profit organizations are very costly, because they are not earning any kind of profits. Even if they get some profit, they used to invest it for the charitable purpose and for the social benefit. And considering the fact they have increased their registration in the SSE for next 2 years. Earlier what used to happen, if there is an NPO which is registered in SSE and they are not raising any fund from this exchange, they will be removed from such exchange. But now they have said that even if the NPO is not raising any kind of fund from this exchange, they are allowed to be registered with the SSE for 2 years. Okay, for 2 years without raising any kind of fund from the exchange. Okay, so the same thing is written here. Let's read this aloud. The register with the SSE for up to 2 years without raising funds are allowed, which would ease the financial burden of the NPOs and that are in early stages of their participation in the SSE. There are NPOs who are in the early stage of their participation. They don't have enough money with them, because raising money is not an easy process. All such annual reporting, all such compliances has to be made by the NPO, and hence the SEBI is giving them more time and more flexibility, so that they can adjust themselves with the compliances and with the costs that they are currently facing in their organizations. Okay. let's talk about this regulation as well, wherein they are stating the governance and the reporting changes. Now, with the increase in the flexibility, with the focus of increasing the flexibilities of these NPOs, they are also considering, the SEBI is also considering some of the facts related to the governance and ensuring that there is a proper reporting regarding each and every activities that these social enterprises are conducting. So they said that there would be a separation of financial and the non-financial disclosure. That means all the decisions that are being made in terms of finance, that how much investment has been made, how much money has been raised so far, all such financial reporting will be done separately, and all the non-financial disclosure, that means how a decision has been made by the board, okay, how a person has been appointed, all such policies, all such decision and non-financial disclosure will be made separately by the social enterprises. Okay. The second point says including governance and tax details, that they ensure that they are complying each and every rule. All such detailing will be given by the social enterprises. Okay, and tax details, all the tax details will be recorded in a separate report in a specified format. Okay, requiring separate impact report for the listed and the non-listed projects. Now, if there is an NPO which has raised fund for a listed project, let's say green project, okay, and there is one project which is not listed in the SSE, okay, not listed in the SSE, and they have raised money, let's say from donations. Okay, so this is a non-listed project. They have raised money from a informal source. So they have to provide reporting for both of these projects. Okay. The last point says that a proposal to replace social impact assessment firm with social impact assessment organization. Now with this change, they are ensuring that NPOs are hiring only experts. Hiring experts to assess the change, to assess the impact of their activities. Okay, so we can say a firm here is showing you that they are not really very expert with assessing the social impact, but with the social impact assessment organization, when NPO deal with such organization who are an expert in assessing the impact of such social activities done by the NPOs, only those organizations must be employed by these social enterprises only. So the word has been changed from social impact assessment firms to social impact assessment organization under this proposal. Okay, so with this we are done with our today's finance current affairs news, and let's start with the question session. I hope everything is fine till now. I think both the PDFs are important for you. Okay, so these PPTs are also important for you, and the PDFs that are being provided in the course is also important for you. There is nothing much difference, because the content is going to be same, but the PDF that are giving in the course contain more current affairs. Okay, so I choose some technical news from that course, from that PDF, and teach you here. In case some of the news are not covered in the session, they are provided you in the course, so that because they are not completely technical, they are easily understood, and hence we do not take it in our session, but you can take it or simply read it in the course PDF itself. Okay, so you all have answered for the first question. Let me read it for you. As per the recent amendment to the Foreign Exchange Management Regulation 2016 by the management, which of the following is a new provision regarding the special SNRR account? Okay, so the first option says the tenure of the SNRR is now capped at 7 years. No, this is incorrect. SNRR accounts can now be opened by non-resident with the authorized dealers both in India and their branches outside India. This is the correct option. Okay, B is the right option. SNR account can now be opened with the foreign banks for the international transaction. No, this is incorrect. Transfer between the SNRR account and NRE account can now allowed. This is also incorrect. SNRR account can only be opened for trade related activities. Okay, it is not really the actual reason, because businesses transactions can also be made through this SNRR. Question number 2. Under the amended foreign exchange management, how has the RBI clarified the terminology for the SNRR account? As we know, they have bring more clarity into this terminology. Let's see what is the right answer. Indian bank with the foreign bank, Indian bank with the bank, to include non-Indian banks as well, by specifying the phrase SNRR account in India to clarify account location, by removing all location based references for SNRR account, by replacing the authorized dealer with the authorized bank. What is the right option for question number 2? We are talking about SNRR account only here. The question asks you about the SNRR account only, and accordingly tell me the answer. What is the right answer of question number 2? Right Pragya. C option is the correct option here. Okay. Question number 3. Recently RBI introduces revised guidelines for the ARCs and how they should handle the settlement of the dues with the borrowers. How do the revised guidelines handle settlements with borrower classified as frauds or willful defaulters? So they are talking about the provision related to the willful defaulters. Okay, so such settlements are prohibited under all circumstances. Settlements are allowed but must ensure they do not impact the ongoing criminal proceedings. These cases require direct approval from the RBI. Only lump sum amount settlements are allowed for these borrowers. Settlement for such borrowers are restricted to high value cases. So what is the right answer? Right, B is the right option here. Question number 4. Recently RBI introduces the guidelines for the ARCs on how they should handle the settlement of dues with the borrowers. What additional requirement has been introduced for the settlement of exceeding rupees 1 lakh crore? So let's have a look on the options. Approval from Supreme Court, mandatory review of the review by an independent advisory committee, and the ARC's board with independent directors. C option says monthly reporting of such settlements to the RBI, public disclosure of settlement terms, payments in installment is prohibited for such settlement. What is the correct answer? Right, Abhishek. Option B is the correct answer. Okay. Question number 5. In the speech at the Mint Annual BFSI Summit on January 17, 2024, the RBI Deputy Governor M. Rajeshwar Rao raised concerns about the structural liquidity vulnerabilities in the banks. What key factor contributes to this issue? The first option says over-reliance on the long-term borrowing from the international market, heavy dependence on wholesale funding for the certificate of deposits, declining demand for the short-term loans, surplus deposits growth compared to the credit growth, high investment in government securities. Tell me what is the right answer for this? Okay, question number 5, B is the right answer. Okay, so they are not going for the long-term borrowing. If you are thinking that over-reliance on long-term borrowing is the right answer, this is the incorrect answer. They are not going for long-term borrowing, they are going for short-term borrowings only. Okay. Question number 6. Recently, SEBI and NISM have introduced the free e-learning course for the municipal bonds. Which of the following is not a target audience for the SEBI NISM municipal bond courses? Okay, so they are talking about the target audience that these courses are not offering. Okay, not the target audience. Let's have a look on the options. Urban local body staff involved in finance or urban planning, policymakers and advisors engaged in urban development, individual retail investor trading in the municipal bonds, financial consultant supporting municipal projects, state level regulatory officials overseeing municipal finances. Okay, so what is the right answer? Tell me what is the right answer for question number 6. No, E is not a right answer. State level regulatory officials are also a part of key stakeholders that issue the municipal bonds, and hence it is not a right answer. So what is the right answer? So basically C is the right answer. Why? Because individual retail investors are not the one who issues the municipal bonds, and they do not have to think, or we can say read about the municipal bonds, that how these funds has been raised through the municipal bonds, and what kind of rules and regulation must be there for issuing such municipal bonds. Okay, so this course is not for the individuals or retail investors. These are for the urban local bodies and the policy makers and the financial consultant who provide such advices to the individuals and institutions that you should invest in municipal bonds, and the state level regulatory bodies. Okay, I hope it is clear. Okay. Question number 7, this is the last question of the session. Let's see what it says. It says that SEBI has proposed changes to broaden the definition of the NPO and expand the types of activities eligible under the SSE framework, Social Stock Exchange Framework. And what changes has SEBI proposed regarding the registration period for the NPO on these SSE? So let's have a look on the options. Waiving of registration costs for the first year, allowing NPO to register for up to 2 years without raising funds, reducing annual reporting requirements for NPOs, mandating NPOs to raise funds within 1 year of the registration, offering free registration for NPO until 2025. So what is the right answer? Right. B is the right answer, allowing NPO to register for up to 2 years without raising funds. Okay. So with this, we are done with our today's session. I hope everything was fine. I hope everything was clear to all of you. Let's have a look in case you have any doubt. Okay, green municipal bonds are the bonds that are being issued for the specific purpose of green projects that are related to the environmental projects. Okay. Certificate of deposits are the deposits that are issued by the banks for the shorter period of time so that they can borrow from such deposits. So basically what happens when an individual give money to the bank, they fixed it for that certain period. Okay. In fixed deposits, what happened? You fixed your money. You fixed your money for for say like 2 years or 3 years. But in this CDs, you fixed your money for shorter period of time, say 7 days to 1 year with bank. Any other thing you would like to ask? I hope everything was clear. Okay, so I believe everything was clear. Okay. So with this, we are ending our session. So keep on revising the current affairs news. Okay, these are going to be very helpful for your exam. Okay, so best of luck for your exam. Okay.